As we complete another year, I thought it would be interesting to have a look at the investment returns that have been achieved by various assets over different periods going back nearly 24 years, but also to look at asset returns over a more recent period, like the last 10 and 5 years. I didn't just want to look at the traditional asset classes like global equities and bonds. I wanted to look at other assets too, like property, gold, and even Bitcoin. Most importantly, how these assets compare to inflation. Let's see what we learn and what assets you should use going forward to not only grow your wealth, but to protect it too. Hi, my name's Carl. I'm a regulated practicing financial advisor and also work with an investment fund management company. These videos are not trying to provide advice. They are not regulated videos and they are my own opinions. And I'm just giving you tips and things to think about so that you can go off and do your own research and look into these things further to see if they suit you. In these videos, I usually cover financial planning topics such as pensions, investments, retirement income, tax efficient products, and also other assets like property, gold, Bitcoin. I've picked the last 24 years as a starting point for the return data, as this gives us the greatest coverage of different assets in the dataset I am using. I am using FE Analytics for the data, and to begin with, I am going to look at global equities, UK residential house prices, UK gilts, and cash. To measure global equities, I am going to use the MSCI AC World Index with dividends reinvested, which is one of the most complete lists of globally listed companies. For UK house prices, I'm going to use average house prices from the Office of National Statistics. And to measure UK gilts, I'm going to use the FTSE Actuaries UK Conventional Gilts 5 to 10 years index. And finally, to measure cash, I'm going to use the Moneyfacts 90 Days Notice 10K Index, which averages interest rates for 90-day notice accounts. I'm going to compare all of the returns to the UK Retail Price Index. This is not the official measure the Bank of England uses for inflation, but I believe it is more realistic as it includes housing costs. Remember, if your money or asset is not growing faster than the rate of inflation, then you are actually losing money in real terms. If money or an asset you hold stays the same value, then it only takes an inflation rate of just 3.5% a year for 20 years to ensure your money or asset has lost half its value in real terms. To start with, we can see that only two assets have beaten inflation over the last 24 years. That's global equities and UK residential property. Only these two assets would have actually grown your wealth in real terms over this period. Money sat in bank accounts has lost value, and UK gilts has just about kept its value. Global equities have clearly been the big winner over the last 24 years. But there is, however, another asset that has performed even better than global equities over this period. I can't show it yet using FE Analytics as it doesn't have the data, but this asset has produced a huge return of 1,046% over the last 24 years. That asset is gold, measured in pounds. So next we are going to look at the returns of these assets over the last 10 years, and this time add gold onto the graph as the software captures the data from this point. To measure the gold price, I'm going to use the iShares Physical Gold ETC fund, so it will be reduced slightly for charges. Now we can see that global equities have again been the star performer, and this time has beaten gold. Only global equities and gold have beaten inflation over this period. Interestingly, property has just about maintained its value in real terms, and UK gilts and cash have well and truly been smashed. Again, there is another asset not shown on this graph that has absolutely smashed the returns of all of these assets over the last 10 years, and that is Bitcoin. Bitcoin priced in pounds has returned an astonishing 31,370% over the last 10 years. Finally, if we look at the returns over the last 5 years, we can see that gold is back in front, just ahead of global equities, and this time UK property has underperformed inflation. UK gilts have actually lost money in nominal and real terms. Now again, Bitcoin smashes these assets over the last 5 years with a return of 1,231%. So what can we learn from these asset returns? It's important to note that data can always be misleading. You can always pick a time frame to suit your argument, and it's important to understand the underlying conditions at the time as to why certain assets performed a certain way. For example, for the period since 2008 up until around 2022, we had very low interest rates, and central banks around the world majorly fired up their money printing machines. The impact of this has been to destroy the returns of cash and gilts, inflate the prices of real assets like equities and property, and then eventually led to high inflation. Over the last 24 years, we have had two major crises, the global financial crisis and the global pandemic. Crises always lead people to gold, as investors see this as a good store of value if the world appears fragile. With these two crises also leading to a huge rise in government debt and ultimately inflation, these are conditions that suit gold as being something to protect your wealth. There is a limited supply, unlike cash, which just can be printed at will by central banks. Whilst gilts and cash can provide a reduction in the volatility you experience when investing in equities, and sometimes property and gold, over the long term, you will give up performance. We have seen that in the last 5 and 10 years, gilts have actually lost you money in real terms. Investing for growth always requires a long-term vision and time frame. There will be volatile periods along the way, but the biggest gains tend to come after the worst falls. You've got to be in it to win it. But just as important as growing your wealth is protecting your wealth. This could be protecting from inflation, excessive government taxation, fall of governments, even the collapse of the monetary system as we know it. A huge change in societal behaviours making large businesses irrelevant. There are also risks we do not know, black swan events that we can only explain after the event happens. Just because something has happened for a long time, or has always happened, doesn't mean it will continue to be that way. So, in terms of positioning your portfolio, for the growth element, global equities look to be the clear winner. You are buying the best businesses in the world, capturing human innovation, profiting from all new inventions to come. It would be more ideal to own these businesses directly, but it's so hard to buy hundreds of companies and predict the winners, so a global equity fund is going to be the better option for most people. Global equities also provide an element of wealth protection, especially from inflation, as businesses can raise their prices over time to protect their profits. But also in terms of wealth protection, we want assets that are limited in supply and people perceive as valuable. Gilts and cash are not limited in supply. Government debt is getting bigger and bigger. Do we really trust successive governments to get a grip on this? What happens when they max out the country's credit card? What if the financial system collapses? Gilts and cash could be completely worthless. What wouldn't be worthless though is property and gold. Whilst they do still build houses, they don't build more land, which is also usually what you get when you buy a freehold property. It's the same with gold. So these two assets are worth having in your portfolio to protect your wealth. Holding equities, property and gold is a great way to be diversified. If one element of the system collapses, you have other assets. If the government go on the attack and try and tax one asset excessively, you have other different types of assets that might be taxed less. There is one other asset you could also add a small element to if you understand it and can stomach the volatility, and that's Bitcoin. Bitcoin works a lot like gold, limited supply, decentralized and potentially outside government control. Remember, it's absolutely right that we do learn from the past, but we don't know what we don't know. We can never be 100% sure of what's coming. So all we can do is position ourselves as best we can. Now, I hope you found this video useful. If you have found some value out of it, please give it a like, add a comment, ask any questions you've got, because I do read all the comments and I try and answer as many questions as I can. And if you're new to the channel, please subscribe so you don't miss another video. Until next time, take care.